Hello and welcome to FX Street Currency in Play. I am Matt Brown and I'm joined today by a new guest, Alessio Rastani, who is founder and CEO of leadingtrader.com. How are you today, Alessio?
Thanks for having me. Good to be here.
Absolute pleasure. Now, we've spoken over the years, so you know your onions when it comes to trading FX. So it's an absolute pleasure to have you on the show and introduce you to our FX Street viewers. Starting off, let's have a look at the trends. Top trends, euro-dollar trading near 119. This is post-CPI numbers that have come out. So a little bit of an uplift on euro-dollar.
Yes.
We have cable again treading water below this 129 level. And moving on, dollar-yen in the mid-110s. That really kind of anchored around that 110 level. What's your view on this dollar-yen at the moment?
Before I come to dollar-yen, I should just mention, as far as the euro-dollar is concerned, we've been long on the euro-dollar since last week, just when it was consolidating, and we went long on it, and we, with our members on Leading Trader, we managed to make some profits on the way up. And I think that was probably because, I think the expectation on the CPI numbers and all that was built in. And from a technical perspective, we were expecting another move up. We'll come to that later. But I think one of the things to discuss, and it's quite important, is the fact that behind the scenes, according to the COT reports, the Commitment of Traders reports, as people will know, the smart money, the commercial hedgers, institutions have been heavily short on the euro, but also getting heavily long on the dollar. So the question we've been asking is, when is this party on the euro, this rally, is it going to end? And
could it be today, month end?
It could be.
Bear in mind the long money is there and they have to balance their books at the end of the month. We could see a big move today.
Yes, certainly we've seen divergences on both the euro and also on the dollar on the separate charts. We've seen divergences. We've seen potential uncertainties forming, the kind of a patterns where markets can top or bottom, but we don't have yet a confirmation. We don't have yet a trigger that says, okay, this is it. So we don't have the smoking gun, if you want to call it that. But yes, as far as dollar-yen is concerned, I am bullish on dollar-yen. I think that if one were to look at the chart of that, we can see we had a spike into the previous support.
Yes.
I forget exactly what that level is, but we took out some major support levels, but only to get back above it, which is a very bullish signal, as most of your chart analysts will probably see. Whenever I see something like that, I see two things, and there's a false breakout and high-frequency trader activity deliberately pushing the market below support levels to bring all the breakout short sellers, and then basically just demolish them. Yeah, take them out. So yes, I'll be bullish dollar-yen, or I have been bullish certainly in the last couple of days, but I think that uptrend could continue, not an uptrend, kind of a more of a snapback correction to the down move. And I think we've got some charts to talk about on the pound as well.
Yeah, so I mean, that leads us in. Let's start off with the dollar. This is the dollar index. Just talk us through the chart for our viewers, if you don't mind.
I'm a great believer in Elliott wave theory, and I know folks who might be watching this, they usually have two reactions whenever anyone says Elliott wave theory. Some people scoff, oh my God, what? But some people will say, what the heck is that? And some people will love Elliott wave theory.
You need to be aware of it because people do look at it and do trade on the back of it. So whether you believe in it or not, people in the market do, so you've got to be aware of it.
Absolutely. I think it's important to be aware of it. And I speak from someone who was a skeptic of Elliott waves. I have not, in the past, I'd say 5 years ago, I was not a believer in Elliott waves. I used to be one of the scoffers, one of the skeptics.
You convert now.
Yeah, I've changed my mind. Actually, I began to realize it really does. It really helped my trading, helped my analysis, I would say. And I think it's helped a lot of folks out there who look at what Elliott waves does. And this is the good thing about it. It really puts the context as to where you could be in the market. I think it's by far the most important and the best leading indicator, because a lot of indicators out there that people look are lagging indicators. Now,
leading is key, though.
Exactly. Now, lagging indicators can be useful. I use moving averages; they're lagging. But leading indicators have one major benefit, which is that we're looking now as a predictive tool. But just going back to that chart, so we just take a look at that. Elliott wave theory tells us that we are potentially now forming, completing either a wave 3 or completing wave 5. Now, again, it's not important as to, I don't want to go into technicals of that, but whatever it is, I think we're seeing a corrective move coming. That's basically what I'm saying here. We're seeing a corrective move on the dollar. Potential, I think this is where we're heading at for an ABC correction. One of the things I look at always before I want to see a correction is divergences. We're seeing a bullish divergence, as we see on that chart. We're also got time resistance. That time resistance is something I look at. That's my own indicator up there. Time resistance on the 4-hour chart. Telling us that, so we've got time cycles coming through, and if we, bottom line is this, if the dollar can break that trend line, and I think we're heading that way, if we can get above 94, that I think is a very strong signal we could be up for a much more significant correction.
Understood. So now, bullish potentially.
Yeah. I would just say this, it could be a correction, or indeed it could be just beginning of a new wave, a new uptrend. So we don't know yet. It's too early to call that. Going now to the British pound. Now, this is also a tough call, but here's my view. My view is that the major rally we've seen from January onwards, and I would say this, the time to have been bullish on the pound was back in January, February. I was in fact bullish back then. I came on this show and I said back then that insiders are buying the pound. I think this rally we've seen in the pound, the strength is completed the wave 4 ABC correction, for those of you who follow Elliott waves. So in other words, if wave 4, for those of, again, Elliott wave theory says that when wave 4 is complete, we're now going to start wave 5, which in a downtrend, which what the pound has been, wave 5 could make us move lower towards the previous lows, potentially even back to the lows of January and February. So it all depends. That depends. I'm not saying this wave count, I'm not saying that my interpretation is correct, but what I'm saying is I would be more confident that this wave count that I'm projecting here is correct if, and only if, we take out the lows of August. The lows of August on the British pound, we just focus on that, guys. The lows of August is about 127.70 on the British pound. That also is also very close to the weekly 21 moving average. Yeah. The weekly 21 is a key level to keep an eye on because the market keeps testing that level. If we take out the lows of August, then yes, I'll be much more confident about, I'd say about more 60–70% confident we're going to complete this downward move, this downward trend towards the wave 5, you want to call it. So what I'm seeing on my charts right now there, Matt, is that potentially we've completed wave 4 at the peak in August, and this could be the start of a new set of waves towards a bearish wave count.
Bearish for the...
I would change, now I would always, with Elliott waves, we have to be flexible on our interpretation. If we don't take out the lows of August, and if we continue to move above the Fibonacci retracement, basically what I've drawn is two potential outcomes. One, blue wave, the blue line shows to me a wave 3 move lower, or it could be the green wave. The green path shows that we could have a retracement back to the 61.8 retracements, the Fibonacci retracements, and then we could get short into those retracements. But either way, I'd remain bearish on the pound, especially if the dollar sees some strength. If the dollar seems to see strength, it's going to put downward pressure, obviously, on the euro and the British pound.
Okay, understood. Look out for that, viewers. Yeah. Finally, economic calendar looks quite busy, but I think the key focus this week is non-farm tomorrow, so look out. But obviously, personal consumption, that's a fairly big number. Initial jobless, obviously, for the week. And standing out, GDP for the CAD, for loony traders out there. Look out for that. But on that note, Alessio Rastani, leadingtrader.com.
Thank you very much.
Thank you for joining us today.
Appreciate it.